employees here at TRANS-MATIC are part of the 6.5 million Americans that are part of the so-called steel-consuming manufacturing. These are the types of employees that are really feeling the effects of the trade war on the factory floor.
The fallout of the steel tariffs hit TRANS-MATIC practically overnight. TRANS-MATIC uses mostly domestic steel, but the cost of the coils coming onto TRANS-MATIC's factory floor have soared as U.S. steelmakers boosted their prices by 25%. That steel is then stamped into components for auto parts, door locks, and plumbing materials and shipped to customers all over the world. So far, customers have absorbed the higher costs, but eventually TRANS-MATIC expects they will chase lower prices abroad, buying those same parts cheaper from TRANS-MATIC's competitors in Europe and Asia.
In a trade war, which is essentially what we're in, there are clear winners and clear losers, and unfortunately there's a lot of collateral damage, and people's lives and livelihoods are put between the crosshairs.
If the tariffs stay in place, TRANS-MATIC may need to transfer production to their plants in China and Mexico in order to remain viable against foreign competition, even if that means rolling back hours and investment at their headquarters in Holland, Michigan. Trade uncertainty hitting home for the factory workers.
We unfortunately fall into that area that it doesn't really help. So it would be nice that it did, but it just doesn't.
To add insult to industry, executives here are bracing for potential retaliatory actions from China on products that they export to that region. Morgan.
Leslie, thanks. I know we've got some of these parts right
here's
here.
a part. Here's a door
props, yeah.
Hardware.
So some of these pieces that TRANS-MATIC makes, we have them here on set. I'm just wondering, and I know you did speak to one of the employees for this. Have they actually already started to lay off workers or furlough anybody, even though they've been able to raise prices, or is this right now really just more of a fear and all the uncertainty swirling?
They have been able to raise prices. They've been passing it on to their customers, but those are more for kind of the long-term contracts. There's only so much that those customers will agree to in terms of raising prices. And if it gets to the point where it looks like the tariffs aren't going away, the customers are going to have to defect elsewhere, potentially overseas, where they're not impacted as much with these rising input costs, and they're able to lock in a better deal. But for now, those switching costs for their customers are too high. Over time, they may feel more inclined to go overseas.